Welcome back to The Real Edit.
I'm Amy.
And I'm Aimee.
And we're here with your weekly dose of content creation, building a business, and trying to stay sane while doing it.
It's a safe space where we share a glimpse into our lives, part pep talk, part therapy, and just enough oversharing to keep it interesting.
Wherever this episode finds you, we're so glad you're here.
You're right on time, so let's catch up.
Welcome back to another episode of The Real Edit podcast. You are in for a shocker today. We are both feeling a little fragile, a little all over the place, a little hormonal. And so we decided to sit down and film a very serious podcast episode because what a great idea is that? My fringe has a mind of its own today. We've already had to stop this recording once because my hair was all over the place. It's just one of those days, gals, but it's going to be such a good day. It's one of those days, but we wanted to film a really solid episode today all about tax as a self-employed UGC creator, and we're really excited to bring this to you because I think it's going to help a lot of people. So that is what today's episode is all about. But before we get into all of that good stuff, Ames, kick us off. How was your week?
My week has been another busy one. They honestly all blur into one at this point. What have I done this week? It was bank holiday, wasn't it? So what did I do? I saw my gorgeous friend Katie. I went for a mooch round TK Maxx with all the autumn goodies. What else did we do? I went to the beach. I took Peaches to the beach, which was super cute.
Which beach did you go to?
I don't actually know what it's called. It's kind of near Clacton, but it's not Clacton.
Oh, okay.
At least I don't think it's Clacton.
I don't even know where Clacton is.
It's more towards like Mersey, I think. It's about an hour and 15 minutes away from me, so it wasn't too bad. What else did I do? Is that it? Oh, I did some gardening.
Aww.
Like the adult I am. We're hopefully going to get our garden done soon. So the weeds out there, like honestly, they could have won competitions. It was like a forest. So we just went out there and basically cleared it all for the landscapes to come in and do the garden. And that is pretty much it life-wise. I've had work going on. I've had some really exciting briefs come in, which I'm really grateful for. But I'm not talking about them too much before everything's signed. But yeah, some really good opportunities coming in, and I'm really excited. I'm feeling really positive now.
I love that. I love positive.
I say now. I have been feeling positive for a little while, but
yeah,
I just think now that I'm actually starting to see the results, you know. So yeah, there's like a lot less worry in me. There's, apart from when I have caffeine, because apparently I've become a caffeine addict and I've started a decaf journey. That is an update for this week. And I ran again. So much has happened this week. Yeah, I think I've become a bit of a caffeine addict, and I have really taken a step back. I was saying to Aimee, so I was literally just colouring, which, as we all know now that Aimee loves a colouring or like peaceful arty session to like unwind and fix my brain. But I was just colouring, and I was literally just sitting there. My heart was like boom, 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 and I was like, what's going on? And I know like Coke Zero doesn't have much caffeine in it, but it does. And I think I just had so much caffeine that day that when I'd added that into my system, my body was like, whoa, Ames, like, okay, enough's enough. So yeah, I've taken myself on a bit of a decaf journey, and it's going well so far. I haven't had any anxiety this week, which I think speaks for itself. But,
that's so good.
How was your week?
And also so good that you like pinpointed it, because I think a lot of the time, like the stress of being anxious is like, why do I feel this way? What can I do? Yeah. But you've actually like very quickly been able to pinpoint something that can help you. So I think that's really exciting for you.
Yeah.
That's so good.
Tell us about your week.
My week was actually really lovely. I spent the bank holiday weekend with my best friend in London, who I haven't seen in ages, and we had like such a fun weekend. We went for a run, we went to a market, we ate some amazing food, I met some more of her friends, we went to karaoke and to dinner, and it was just like so much fun. Had a proper little boogie, absolutely loved it. I had some briefs to film off the back end of that weekend, because obviously like a bank holiday weekend kind of throws your whole week a little bit, right? So had some briefs to film when I got back, but those all got done. I was really happy with how they turned out. And apart from that, I have somehow managed to sign myself up for a 10k race in literally like 2 weeks that I am so unprepared for. It's ridiculous. So I need to start running again. So I've started doing that again, just like training and trying to get my distance back up. And yeah, like I feel like this week, I've spoken on this podcast before and I've said that I don't really have like a cycle. I've got PCOS, don't really struggle with hormones. I think I'm going through some changes and I think I am hormonal and I'm not dealing with it very well. Yeah, I'm all over the place. I can't think straight. I feel like so uncomfortable in so many different ways. I hate how I look in every picture, angle, video, everything. I am sleepy. I've got a headache. I'm like, I just feel like rubbish. So I think I'm just like navigating. I feel like I'm a teenager. I don't know. I'm in a little hormonal hurricane this week, and I'm just navigating that. So if I seem a little bit off, it's because I am. It's just a bit of a weird one. To be going through at 30, but the joy of being a woman. Yeah.
I feel like so many times on this podcast I've been like, I'm so hormonal, and you've not been able to relate to it, so now you're going through it. I'm like, I could sympathise.
Yeah, and also I'm like, have all of my friends been like going through this their whole lives? Like, that's so impressive. Like, I don't know what's going. Yes, I feel a bit all over the place, but it's nothing we can't handle. No. Nothing some electrolytes and a good cry can't fix.
No, absolutely. All we need to do is talk really in depth about tax and you're fixed.
That'll do it. Sounds good. Let's do it.
So we thought we'd put together another tax episode. We did do one in season 1 and it actually did really well. We had a lot of good feedback from it, and creators did say that they found it really helpful. And upon like reflecting on that, we realised that there was more stuff that we could add in. We've obviously got more experience now, research, etc. This by no means is a official tax. We are not accountants. We don't know what we're talking about. No, we're just talking from experience, and we just thought it'd be a really helpful tool for like self-employed UGC creators to just have. If you've got any questions about like taxes as UGC, like registering us for self-assessment and things like that, hopefully like there is some information in here that can either answer your question or help. But I would say do obviously seek help from an actual professional.
Yeah, I think also like taxes, we've said this before in a previous episode, taxes can feel really scary. And so maybe we can break down some of the basics, some of the fundamentals in a way that doesn't feel so scary, in a way that's like in our pajamas, just two girlies. Doesn't need to be scary. Yeah. And then if you do have other questions, more detailed questions, either hit us with them and we'll see if we can help. If not, maybe go to a professional. Maybe go to someone who's qualified. But yeah, we just wanted to be a really good, like you said, first point of call for the tax basics.
Yeah, and I think a lot of creators in the space do have tax related questions, because it, like you say, can be really quite daunting. There is a lot of things to know about different things as tracking and registering and all sorts of things that if you haven't done it before, you'd have no idea what it is. So yeah, I always see people asking questions about tax and things like that. So even if we can just answer one question in this episode, that would be good. So let's first of all strip it back, like right back to the beginning of registering as self-employed. Like you can do this whether you're a full-time creator or part-time creator. You basically, once you hit the £1,000 threshold in a tax year, you have to register as self-employed. As soon as you go over that £1,000 mark, you need to be paying taxes on anything above those earnings. And this is just from like a self-employed, even if you're not registered, kind of your self-employed side hustle, if you like. It doesn't class your full-time, is it PAYE salary? It doesn't count that. It's talking like separate side hustle, income of over £1,000 in a tax year, you then have to register. So even if you have a full-time job and you're earning like a full-time salary, if you do start UGC and you earn over the £1,000 threshold, you do need to register yourself. And literally like every income that you earn from it does count towards that amount. So even like if you do gifted collaborations, the value of the item that you've been sent in return for the content counts towards your £1,000 mark. So bear that in mind as well. And we do have an episode in gifted collaborations back in season 1 if you're unsure about paying tax on those. But they do class towards your income.
To register as self-employed, super simple. Head over to the government website, literally type in register self-employed into Google. You'll get where you need to be. You have until the 5th of October following the end of a tax year to register as self-employed for that previous tax year. And once you've done that, super simple process, you will receive something called a unique tax reference number, which is essentially a little bit like a national insurance number in that you get one once and it doesn't change. So once you've got that, keep it safe, you're going to need it. That number helps HMRC identify you for the purposes of things like tax returns. It's your unique kind of identification number, or a UTR. Okay, we're going to break this down as simply as we possibly can because this can be a very confusing, complex topic. So, first things first, and apologies if we're teaching anyone to suck eggs, but we want this to be a really nice first point of contact, like we said. So we're going to go right down to basics. Okay, so for the purposes of keeping this really, really simple, it's important to point out that you only pay tax on profits. So you don't pay tax on the total revenue of your business, you pay tax on the profits. That is to say, the total amount of money your business makes minus the costs it takes you to run that business leaves you with your profit. That is what you pay tax on. However, you have a personal allowance of £12,570. It's profits above that value that then are subject to tax deductions. The amount of tax you pay is dependent on the amount of profit that you make. So I've got the numbers here in front of me. I'm going to read them out to you. Basic rate, that means you pay 20% tax. That applies to profits between £12,571 because we said that allowance stopped at £12,570. So any profits between £12,571 up to and including £50,270, if you make that amount of profit, if it falls within that range, you pay 20% tax on that. Anything above that and up to £125,140, you pay a higher rate of 40% tax on that. And above that, 45%. So essentially, it could be if you make a certain amount of money, you'll be paying a different amount of tax on the different chunks of profit. Does that make sense? So that is your income tax basics. So I've got an example here to make it super clear. Let's say you make £20,000 from content creation in a tax year. And your allowable expenses came to £5,000. That's your cost. So that leaves you with a £15,000 profit. That is taxable. Remember, you've got a £12,570 personal allowance. So once you take that off of your £15,000, you're left with £2,430 of taxable profit, which is taxed at the 20% rate because it falls between the 12,571 and 50,270 band. Therefore, you're taxed 20% on it, which means you're taxed £486. And that is your income tax value. You then have national insurance contributions to pay too. Okay, national insurance, Aimee, do you want to take this one?
Okay. There's a lot of talk online about putting away just 20% tax for creators, and like that's kind of the figure that is in all the informational videos around tax. But actually that doesn't account for if you are earning over the 50 grand mark of profits, you are actually going to have to be putting away 45%. So just obviously keep in mind, depending on how much money you're bringing home, if you're really rolling it in, if your profits are over 50,000, then you are going to have to pay the higher tax threshold. And while we speak about the 20%, something that we also didn't realise until a little bit later on in our journey is you actually need to put aside for national insurance as well. National insurance, I think we will all know what that is. If you've been in a full-time job, you will have seen it on your pay slip. It's just another amount that comes out, this deducted the same as your tax. And that you also need to account for putting that aside as well as a self-employed person. So as on top of the 20%, for example, you are gonna need to put aside a certain amount for national insurance too. We're not going to go too in depth about national insurance contributions, but I know that there are two classes, and so, kind of similar to tax, if you earn over a certain amount, you are going to be liable to pay a higher contribution, and also if you're below that threshold, it's a different contribution as well.
Yes, there's 2 classes, and you only everyone pays class 2. If you then earn over a certain amount of profit, you then have to also pay class 4. So there are 2 types. You only have to pay both of them if you're earning over a certain amount.
Yeah, so it really does
Probably
depend
like the most
on
basic way of
what
summing
you
up.
earn, basically. These contributions do also count towards your state pension and things. So when you're paying that, that's what that's going towards. One thing I will say is you don't have to worry about paying it separately. When you submit your self-assessment, it is paid alongside your income tax. So it's all done in one transaction, if you like.
Nice, neat, tidy, process. Yeah. Okay, so we've started with the sad news, which is the tax that we have to pay. But actually, before we pay any tax, we have to make some money. So let's talk about income streams and what counts as a form of income as a self-employed UGC creator. And essentially, because it can be a little bit tricky, it's not super black and white for something like content creation, but it's everything that makes you money. So that's your UGC brand deals, that's money you make through platforms like TikTok if you're in the creator fund, for example. It's money you make through affiliate posts or sponsorship posts. It's money you make through TikTok shop if you're taking home commission from there. It's ad revenue from things like YouTube if you're posting on there. There are so many different ways you can monetize what you're doing as a content creator online. So just make sure that you are remembering and capturing every little bit of income that comes in as part of your business. The other thing to shout out, and you mentioned this briefly earlier, Ames, is gifted collaborations. So you will need to pay tax on the value of the gifted items if that is the payment you're receiving for the content. So if a brand says to you, we'd love you to make a video for us, and in exchange for that, we will gift you this product. That product is your payment for the video. Therefore, the value of that product, let's call it £47.99. Don't know what it is, but whatever they've sent us, that is £47.99 worth of income. If the brand says, we'd love you to make a video with our product, here's the product, we're going to pay you 200 quid. This was not payment. This was just the product they sent you in order to make the video. This was the payment. So you're paying tax on the £200 here. Does that make sense? Is that clear, or have I rambled the hell out of that?
Yeah, no, that totally makes sense. The only thing I'd add is the only way to differentiate, and like I say, we're not going to go too much into gifted collaborations on this episode. We have got a whole episode that explains the whole thing. But if a brand says to you, we will send you this product, but you don't have to do anything with it, that is simply just PR, and that is a gift. That doesn't class as a taxable income. So if there's no exchange, of you between them. And another thing also actually is if you post it onto your social media, you're promoting your own services, so it becomes a business transaction that way.
Yeah, that's exactly what I was going to say. Yeah, so if a brand sends you PR and says, no obligation to post, just a gift, hope you love it, and you just bring it home, try it out, enjoy it, happy days, that is not a business transaction. That is just a gift. You don't need to pay any tax on that. The second that product is featured on your social media in any capacity, it becomes a business transaction, because we all know that posting on social media boosts your business, boosts your visibility on social media, makes you more open to opportunities, promotes your content making abilities. It becomes a business transaction because you featured it on your business page. So as soon as you post it, whether you're obligated to or not, it becomes a business transaction, and you are therefore it then becomes a taxable item.
Yeah.
Oh, it's a minefield, isn't it? You can understand why new creators get really nervous about this sort of thing, but fundamentally it is very simple. You just got to wrap your head around it.
Yeah, and I think one piece of advice that I think you'll agree on is just track everything from day one. If you track everything, you're going to make your life so much easier, especially in terms of gifted products, for example. If you don't use it and you don't do a collaboration for it, it's so easy for it to just slip out your mind. Oh, actually, I was sent that, and I used it for this. I used it in this video, so I need to pay tax on it. So actually, just track it from from day dot.
Another thing to shout out in terms of income, if you're someone who sells courses, digital products, stuff like that, income again. The other thing I was going to say is, this is why it's really important when brands come to you and say, are you willing to do this on a gifted basis? Have a look at the value of the item. Run some quick math. How much am I actually going to pay how much am I actually going to end up forking out? Because yes, it's free when you send it to me, but it's not free when I submit my taxes. So actually, how much is this gifted collaboration going to cost me? Not only in terms of time and energy and effort of making the content, but in like financially, how much is it going to cost me?
Yeah.
And the other thing I was going to say is, if you do accept a gifted collaboration, make sure you have proof of the value of the item. Even better if it's on sale, because then the value is less. So make sure you've got proof of value ready to submit when it comes to tax season.
Yeah. And one other thing that comes to mind actually, and I had it hit me in the last year, is payments through PayPal. They actually take, not only obviously if, for example, if someone's paying you from the US, you get the conversion charges anyway, but actually PayPal take a chunk of the payment as well. I can't think off the top of my head how much that is, but just to note, if you do receive payments through PayPal, you are not going to receive the full amount. So just look into that if that's a route that you tend to go down, because that did hit me and I ended up getting kind of much less than what I was expecting to, and because it was a fault of my own for not realising the charges that come off of it my end rather than the brand sending it. So
And don't be afraid if a brand is saying, we're going to pay you this amount in, let's call it US dollars, and we're going to pay you via PayPal. Don't be afraid to do what I've done before, which is to say, you need to up it to this amount, and you need to, in order to account for any of those charges coming off, so that I end up with that number right there that you promised me in the beginning. And they do tend to be really good about it in my experience. So just a little tip.
Okay, so now we've spoken about income. Let's talk about everyone's favourite part, and that is our outgoings, our expenses, things that we can claim back for. So your expenses are basically anything that we pay out for our business, that is wholly and exclusively for business use. I must stress that. But they reduce your taxable income. So at the end of the tax year, it's going to mean that you have less taxable profit depending on how much you spend. So I think when we talk about expenses, I think a lot comes to mind, like that's very obvious, like our equipment, like your phone, if you buy out a phone for your thing, your camera, tripod, ring lights, anything like that that is helping your business, that is an expense that you can claim for. But things that aren't necessarily spoken about as much is you can actually claim for things like your fuel if you're going places purely for business use, or subscriptions like CapCut Pro, editing, anything like for if you want to pay for things like royalty for your music, anything extra that is going towards your business, you can claim for that too. Even things like your home, if you're working from a home office for your business, you can pay a portion of your rent, Wi-Fi, bills. I'm not entirely clued up on it. I think Aimee is a little bit more. So do you want to take it?
Yeah, I'm not great at it, but essentially, you can't. Let's take me for example. I work from home entirely. That's where I don't have a workspace. I don't have an office. I work from home. I cannot claim 100% of my bills and utilities and stuff like that because I work from home, because I'm not using the entire home all day every day to work. What I am using is, for example, my office. So how much of my house is my office? Like what proportion of my home is my office? Let's say it's a 5-room property. The office is therefore 20% of my space. But also how many hours am I spending working in that space? There's a whole load of ways you need to calculate this. Alternatively, the government website does just give you flat rates, which is how I personally do it. Head to the government website, it's all there. It's actually really simple. It's just I don't want to overstretch myself here. But basically it's not quite as simple as I work from home 100% of my business hours, therefore I'm going to claim all of my rent through. It doesn't work like that. But you can certainly claim back some money on things like you said, your Wi-Fi, your heating, your water, whatever. Which is great. The other thing I was going to say is like really when it comes to expenses, think. Printer ink, a phone case, a protective phone case, a laptop sleeve, another charging cable because yours broken, you had to get one off Amazon. Like there is a notebook because you need things to plan, the pens and the highlighter. Like there is always think. Yeah. There's so much you forget to put on there. Parking, if you've got to pay £1.20 on Ringo because you need to go into town and pick up a prop for a thing, for a UGC project, £1.20. Ringo, it's an expense. Put it on. It all adds up, and you'll be shocked. If you haven't had to do this before, you will be shocked at how much it adds up. But I guess just to re-emphasize what you said at the beginning there, which is so important, a business expense is only a business expense if it is wholly and exclusively for business use. So you've got to be very honest with yourself, and I don't think we're going to sit here and get into the nitty gritties of what is and isn't, because that's up to everyone to decide for themselves. But yeah, wholly and exclusively for business use. That is your anchoring point.
Yeah. Another thing, keep your receipts. Anything you buy, keep your receipts for it. If you do mileage, take a screenshot of how long your journey is mileage wise. And one tip that Aimee passed on to me was getting a scanner thing for your receipts. You can have them onto your phone and have a digital copy. Otherwise, you do end up literally just drowning in a pile of receipts. So I'd say that's the only other thing.
Yeah, I use Tiny Scanner. It's a free app. And you basically just take a picture of anything, but receipts included, and it turns it into a document that looks exactly like it's been scanned through an old-fashioned scanner. And then you have a digital copy, and you can get rid of your physicals, and it's just nice, clean cut. Yeah. You can send it to whoever needs to see it, etc. So yeah, 100%.
So much easier.
So obviously we spoke earlier about putting money aside as the year goes on for tax. So having that kind of system in place whereby you're putting at least 20%, if not more, aside every single month, just so you have a little tax pot, safe and sound, protected, ready to go when it comes to submitting your self-assessment. So that is one form of tax planning. We also spoke about the need to maybe actually put a little bit extra aside because of national insurance contributions. So maybe that looks like more like 35% of your income being put into tax pots every month. This is all really robust, proactive tax planning. Something else to consider is that when you submit your self-assessment, that is the document you submit at the end of the tax year, declaring all the money you've made, all of the costs or your expenses, therefore declaring what your profit is, and then handing your tax over to the government. When you submit that self-assessment, you're not only paying tax on the previous tax year, but you're also paying something called payments on account, which really confused me the first time I had to do this, because I was like, why is this number so much higher than I thought it was going to be? What's this extra chunk of money? It really felt like it had been plucked out of thin air. But what I understand now is that essentially HMRC proactively collect about 50% of what they think you will be due to pay on tax the next year as well. So not only are you giving them the money you owe for the money you made or the profits you made in your business for the tax year just gone, but you're also saying, based on the business that I ran this year and the money that I made this year, here's what I think I'll probably be paying in tax next year. Here's 50% upfront. Does that make sense?
Mm-hmm. Yeah, and do you have to pay that?
No.
Do you have a choice? Okay.
Yes, you do. However, in fact, there is no however. Yes, you have a choice. You don't have to do it, but you can. I personally choose to, just because it definitely hurts when you do it. Especially the first time I did it, I said, yeah, okay, fine, take it. It's just real peace of mind for me. And also, if something changes, if you don't make as much money as they thought you were going to make, or rather as much profit as they thought you were going to make, you may end up getting some of that money back. So you've kind of got two outcomes here. You're going to pay 50% up front. The calculation is going to be pretty accurate, and you're going to end up owing the other 50% come the end of the tax year, which does also mean that it's a lesser hard hit at the end of the tax year because you already paid half of it up front. Alternatively, you don't end up making as much money as they thought you would. The calculation was a little off. You end up getting some money back.
Okay.
So it's totally up to you, and it very much depends on your financial position and your preference. But that is payments on account. Something else I really wanted to shout out in this episode was pensions. We spoke about this during one of our episodes in season 1, and I just slightly misspoke, and it's been bugging me ever since. So I just wanted to shout this one out and make sure I got it entirely correct. I basically said that pensions you could basically like expense your pension contributions, which isn't entirely correct. But when it comes to submitting your expenses and accounting for all the different things that we spoke about in this episode already, you do need to consider pensions. So for every contribution you make to your pension, the government will reward you with 25% tax relief. So, for example, if you were to put in £5,000 into your pension across the tax year, you would benefit from a £1,000 tax relief when it comes to self-assessment. So it's just, there are so many different ways to be like tax savvy and also to put yourself in a really strong financial position. So just wanted to clarify, because obviously last time I said it was like a business expense and there just wasn't quite right wording. So yeah, 25% tax relief on any pension contributions. And I'm pretty sure it's like up to an infinite value. I don't think there's a cap on it. There certainly wasn't the last time I looked, or at least I couldn't find one. So yeah, pension contributions can really help you not only plan for the future, but also become more tax efficient. So a good one to shout out.
Okay, so we've spoken a lot about tax and things like that, so I feel like maybe we need to wrap it up with like a full circle moment, a bit of a checklist, because one thing I will say is with tax, organisation goes such a long way. Even something like having a separate bank account. I know some bank accounts even have tax pots like incorporated into them, so I definitely look into getting one of them. Bookkeeping, tracking everything on like an Excel sheet, Google Sheet, anything that's going to keep track of your income and expenses. I'd also say having like regular reviews, like just with yourself, either that's quarterly, monthly, whatever kind of suits you best. Just have a little sit down, track back over kind of what you've recorded, what you haven't. Just make sure you're really up to date, because you will thank yourselves for it, I can guarantee you. So Aimee, what would you say are like the step-by-step what creators need to do to register or pay tax or anything like that?
Firstly, register as self-employed as soon as you hit that £1,000 mark. Secondly, get comfortable with, make a note of the relevant deadlines for certain submissions. So just wrap your head around, what the tax year dates are, what your deadline is for your self-assessment, what your deadline is to register as self-employed, all of these good things. Make sure you've got your deadlines really clear in your head, because that's a really easy mistake for someone to make. And all of these things could lead to fines. So just make sure you've kind of got that all covered. Then I would establish some kind of tracking system nice and quickly, a way of tracking what you're bringing in, a way in terms of revenue, a way of tracking what you're paying out in terms of costs, and a way of tracking your expenses. So some kind of receipt system. What does that look like for you? What are you comfortable with? So make sure that's set up nice and easy. And then I would be looking at establishing some kind of financial system that allows you to put money aside into tax pots if possible. So whether you want to do, if you want to do separate pots, a 20% pot maybe for your income tax, maybe a 10% pot for your national insurance tax, or if you want to combine them, whatever that looks like for you, whether you want to do it on a monthly basis manually and you pull it out, whether you want to start a new bank account that automatically pulls the money out for you. So that's what I have. Every time a payment is made into my account, various percentages are pulled into different pots for me. So at the end of the month, or rather at the end of the day, when I open my banking app, the money at the top there, that number there is mine. Everything else is protected and popped away. That's mine. Really, really nice to have that kind of peace of mind. The only other thing I would say in terms of saving would be that payments on account number. Maybe just to account that into your sums. If you think you want to be one of those people who pays ahead of time, start thinking about saving for that in the same way as you save for every other kind of tax so far. And one thing I would shout out is that April 2026, sole traders will all need to be on the new government tax system, which will all be digital. I'm not personally on it yet, but I know that a handful of creators are already using the kind of test site, if you like, to really wrap their heads around how it works, because everyone will be expected to be using that. And we're going to want to make sure that come April 2026, we're hot on that system. So I would probably say have a little bit of a Google, and start to familiarize yourself and get comfortable with the new system that we're all going to start to move over towards. Very rambly, boring answer. I'm sorry, but it is a pretty dull topic.
I was going to say,
yeah,
it's
but also
tax.
hopefully this kind of shows you that it doesn't have to be stressful. Like, it's just tax, it's just numbers. I know money is stressful. I'm not ever undermining that, but you know, if we're talking about tax in a non-emotional way, money in, put that money there, put that money there, put that money there, spend that money, have a lovely time. You know, like, it doesn't need to be super stressful, and it can just be really quite dull, really quite chill. You know, so that's probably hopefully a big takeaway from this episode.
I hope you come away from this episode feeling that taxes aren't scary anymore, because I know when I first started, I definitely found them a bit intimidating. But now that I've kind of got my head around them, like you say, it is just a case of money comes in, money goes out. It is what it is. You have your systems in place, and like with that, everything runs smoothly. So I think as long as you kind of stay on top of the things that we've mentioned, I think you'll be absolutely fine.
I'm also going to shout out at this point the Mettle Business Account. I am not in any way affiliated with them. I do use them personally. I've just found them to be really brilliant for my business. So I would definitely suggest a Mettle Business Account. You do get free accounting software. They're owned by NatWest, so it's a very reputable, established banking brand. And also you do have the ability to save automatically into pots, which I really, really like. It's also got a really great invoicing kind of creation system, and it tracks all your invoices. It's just great. I really love it. I've also got a code I can use, or rather that we can put at the bottom of this episode, whereby if you sign up using the code, you'll get £50, I think, in your account, which is really cool. So we could put that down there, and if anyone decides to use it, hopefully you can benefit from that. Again, not paid, sponsored, anything, although that would be so cool. But yeah, definitely one that I personally use and recommend. I don't know if you have any other recommendations, Ames, but that's my one.
No, I don't think so. I've just signed up to that one, so yeah, I just need to figure it out and see how it goes with that. Otherwise, I've just been using my regular bank app and then just set up different accounts for different things. But like you say, it's so much easier to just have it all done for you, because I kind of have to manually go in and move money and things like that. So yeah, I think it's a good one to shout out, definitely.
I think that's everything. I think that's our tax episode done.
I think it is.
Love it. I feel really good about this. I think this is going to be really helpful and really calming and reassuring. I know it's a bit boring compared to some of our other episodes, but I think hopefully what this podcast is a nice mix between fun, girly, silly, yap and do our makeup and whatever and talk about content, but also the more serious kind of hand-holding through some of the more stressful or confusing parts of running a business. And I think this is a example of a very businessy episode, but hopefully it really helps some people and calms some people down. So really hope that you've enjoyed listening, you've enjoyed watching, and it's helped you somehow.
Once again, thank you so much for watching or listening. We really hope you enjoyed the episode. Like Aimee said, it's been a little bit of a more boring informational one, but also hopefully you found it really helpful. We hope you have a gorgeous week, and as always,
love you, bye.